If you're an entrepreneur with a 700 credit score, you are sitting on a 50 to 100,000 opportunity that most people completely overlook. Most people get denied for business credit not because they are unqualified, but because they have no strategy. And here's what's really frustrating. While you are getting denied, other entrepreneurs, sometimes with worse credit than you, are walking away with 75, 85, or even 100,000 in 0% APR business funding. In this video, I'm giving you the exact blueprint we use to help our clients across the US to get approved for up to 100,000 in business funding at 0% interest without showing income or business revenue. I'll show you the 5 pillars that actually get you approved, and most importantly, I will show you what not to do. You must watch this before you apply. I'm Alain, I'm the founder of SA Group. We specialize in helping business owners or entrepreneurs like you access to funding the smart way. And trust me, I've made every mistake in the book. When I first got into this game, I applied for a bunch of business credit cards without knowing anything about lenders' rules, bureau pools, or how to set up your business correctly. I thought that my credit score was enough, but I got denied over and over. It cost me time, credit score points, and opportunity. But here's what changed everything. I realized that getting approved for massive business credit isn't about luck, connections, or even a perfect credit score. It's about understanding the system. See, banks follow very specific rules when evaluating business credit applications, but these rules aren't what most people think they are. Most entrepreneurs are following advice from YouTube videos or Facebook groups. It's actually hurting their chances. Now, we helped our clients secure multiple 6 figures in funding, and I'm going to break it down all for you. But before we dive in, I need to be clear about something. What I'm about to share isn't some get-rich-quick thing. This is a legitimate business funding strategy that requires good personal credit, proper business structure, and following a specific process. If you don't have at least 700 credit score, if you are not serious about building a real business, or if you are looking for some magic button to push, this video isn't for you. But if you are a serious entrepreneur who is tired of being held by lack of capital, the next 20 minutes will change everything for your business. So let's get into the 5 pillars. Pillar number 1, your fundability foundation. This is where most people blow their chances before they even apply. I can't tell you how many entrepreneurs I have talked to who have 750 credit score or higher, successful businesses, and they got denied left and right. And when I look at their setup, I knew the problem right away. Lenders evaluate your business credibility before they even look at your personal credit score. You need to set up your business right away, and there are specific things that lenders are looking for. First, LLC formation, not a sole proprietor, not a partnership, an LLC. This shows the lenders that you are serious about separating your business from your personal finance. Second, get an EIN from the IRS. This is your business tax ID number. Without this, you can't even apply for business credit. But here's what most people don't know. You want to get at least 30 days before you start applying for credit. Third, open a business checking account, and not just any account. You want to open it at a bank where you want to apply for business credit, like Chase, Bank of America, Wells Fargo. These relationships matter. But here's the key. I recommend you at least $1,000 sitting there for 60 to 90 days before you even apply for credit. Fourth, use a real business address, not a home address, not a PO box. Lenders want to see that you are a legitimate business address. If you work from home, get a virtual office address or use a UPSB mailbox with a street address. Fifth, create a business email with your domain. Not a Gmail, not a Yahoo. Get a professional domain and create your email with your domain. This costs $10 a month and makes you look like $1 million company. Sixth, build a basic website with your brand. And it doesn't have to be fancy, but it needs to exist. Lenders will Google your business. Make sure they find something professional. Seventh, pick a low-risk NAACS code. This is your business classification code. Consulting, e-commerce, digital marketing, these are low risk. Construction, restaurants, retail stores, these are high risk. Choose wisely. 8. Get your dance number and set up 2 to 3 early vendor trade lines. Your dance number is like your social security number for your business. And vendor trade lines are small credit accounts with office supply companies or telecom providers that report to your business credit bureaus. Think of this like showing up for a job interview. If you don't look the part, you are out before the conversation starts. Pillar 2. Personal credit optimization. Your personal credit is the foundation for your first business credit approval. Now, I know some people are thinking like, Alain, I already have a good credit. I have 720 credit score. But having a good credit and having optimized credit for business applications are two different things. Here's what lenders actually want to see. First, aim for a 720 FICO score, not 700, not 710, 720 or higher. This puts you in an excellence category for business lenders. Second, keep your utilization under 30%, ideally ideally 10 or less. But here's what most people don't know. This applies for both overall utilization and individual card utilization. If you have one card maxed out, even if your overall utilization is low, it can hurt you. Third, avoid new inquiries in the past 90 days. Lenders see recent increase as a sign of desperation. If you have applied for personal credit recently, wait 90 days before you apply for business credit. Fourth, have at least 2 to 3 primary accounts, ideally 5, with high limit, 10,000 or higher. Lenders want to see that other banks trust you with large amounts of credit. So if your highest limit is $2,000, that's a red flag. Fifth, remove subprime accounts from your file. Credit One, Indigo, First Premier. These cards actually hurt you. Sixth, consider credit repair or adding new trade lines if you need it. If you have collections, late payments, or negative items, get them removed before applying for business credit. Your credit report tells a story. Lenders want to see you managing high limit responsibly, not maxing out store cards. If your credit needs work, don't wait. Start optimizing right now. Pay down balances, remove negative items, and add high limits accounts. This foundation work is what separates approvals from denials. Pillar 3. Bank rules and data points. Every bank plays by its own rules. If you don't know them, you are flying blind. This is where most people messed up. They think all banks are the same, so they apply randomly and hope for the best. And that's not a strategy, that's gambling. Let me break down the major players. American Express. They pull from Experian for most applications. They love to see a real business, professional website, clear business purpose, proper structure. They are more forgiving on your business age, but strict on personal credit quality. Chase. They pull Experian, plus they have internal rules like 524 rule. If you have opened 5 or more personal credit cards in the past 24 months, you are directly denied. But here's the key. They love banking relationships. Bank of America. They pull all 3 bureaus, which can be good or bad depending on your profile. They reward existing customers with higher limits and better terms. Wells Fargo. They focus heavily on business banking relationship. If you don't bank with them, your approval odds drop significantly. Capital One. They pull all 3 bureaus and they have their own internal scoring system. They are good for newer businesses, but limits tend to be lower. Score requirements are different, but most want 700, some will go as low as 680 for existing customers. But here's what really matters. Internal scoring based on your relationship with the bank. Do you have a checking account? Do you have a savings account? How long have you been banked there? A business checking account with $5,000 that's been open for 6 months looks much better than a brand new account with $500. Here's a tactical tip that can instantly increase your approval odds. Open a business checking account, deposit $1,000, $2,000, let it season for 60 to 90 days, and you will instantly increase your approval odds at that bank. Pillar 4. Credit stacking sequencing. This is where you multiply your funding, but you have to follow this sequence. Most people apply for one card, get approved for 10,000 limit, and think that that's it. But when you understand the credit stacking, you can get 50,000, 100,000 in a single week. Here's the strategy. Use a tiered approach. Tier 1 start with top tier banks like American Express or Chase. These banks have the highest limits and the best terms. Apply here first when your credit profile looks cleaner. Tier 2, then move to mid-tier banks like US Bank, Truist, Wells Fargo. These banks often approve after seeing you've been approved elsewhere. Tier 3, finish with regional banks and fintech, Navy Fed, PNC, Capital One. These are your backup options and often approved when others won't. Apply within a short window, 24 to 72 hours, to maximize your inquiry impact. Credit bureaus treat multiple inquiries in a short period as a rate shopping and count them as one inquiry. Match your credit profile to each bank's criteria for approval. If you have a strong Chase relationship, hit Chase first. If you are new to business, start with American Express. Use pool data to stagger applications and avoid duplicate pools. If Chase and American Express both pull Experian, apply Chase first, then wait a day before applying for American Express. You can get 50,000 or 100,000 in a single week if you hit the right lenders in the right order. But sequence matter more than most people realize. Pillar 5. Post-approval strategy. Getting approved is just the beginning. You have to use this funding wisely. Most people get approved, maxed out their credit cards, and then they wonder why they can't get more credit. That's the backwards thinking. Here's how to maximize your funding long term. First, request a limit increase after 60 to 90 days of good usage. Most banks will automatically increase your limit if you use the cards responsibly and pay on time. Second, transfer balance to preserve 0% APR once promotional period ends. Don't let good credit turn into expensive debt. Third, always pay more than the minimum. Aim to keep your usage reasonable. Even though business cards don't report to your personal credit, banks can still see how you are managing your specific cards. Fourth, never mix personal with business charges. Keep everything separate. Use business cards for only business expenses and personal expenses for personal cards. Fifth, build long-term banking relationship for future funding rounds. The banks that approve you now will be more likely to approve you for business lines of credit, term loans, and even larger credit limits in the future. When you treat treat the business credit as a system, not as a one-time play, banks will open doors to 6 and 7 figures funding. This is the power of long-term thinking. Each successful funding round makes the next one easier. Don't just get the money and disappear. Build a relationship, pay responsibly. This sets you up for unlimited funding in the future. Look, I know that choosing the right business credit card is just the first step, but the real opportunity is using these cards as part of a comprehensive funding strategy to access 50,000, 100,000, or even more in business credit. That's exactly what we do in our 100,000 business funding program. We don't just help you pick one card. We build a complete credit stacking sequence that maximizes your funding capacity while protecting your personal credit. If you're a business owner with a 700 credit score or higher and you are serious about scaling without using your personal credit or giving equity, I want to invite you to book a free funding strategy call. Now, here's the best part. You don't pay a dime until you actually get funded. And if you don't get at least 50,000 in approvals, we keep working until you do. That's our guarantee. That's how confident we are in our process. We will analyze your current situation, show you exactly which cards you should target, and build a custom funding sequence that could get you approved for 50 to 100,000 in business credit at 0% APR. But here's the thing. There's an incredible amount of custom one-on-one work involved, so we can only work with a limited number of clients each month. Click the link below to apply for a free strategy call, and let's see if we can help you unlock the funding you need to take your business to the next level.